Hey guys, welcome back to another Sunday night show, also known as Drinking in the Dark with Frugal Tiger, where we go over major market making news as well as stocks that I'm expecting to move for this week. Anyway, I'm drinking Blake's hard cider. It's actually not very good. I don't recommend it, but it's very low calorie. So for those of you who are not exercising or not eating well, not the worst thing to drink. Anyway, let's get right into it. This week is pretty light on earnings, and honestly, I feel like I'm kind of forcing some earnings names just to give you guys some ideas. But a couple things I want to talk to you guys about before we even get into individual stocks. I'd mentioned last week to not overly freak out about the market with the bond rates and inflation and things like that. But the one thing is, my situation is a little bit different than yours. My financial situation is probably a little bit different than most of yours. I'm not that heavily invested in the market. I haven't been that heavily invested in the market. As I mentioned a while back, I had heavy exposure to banking stocks that I've been trimming. And at this point, with the latest run up in banks, I'm out of Wells Fargo now completely. I'm out of Bank of America completely. I'm out of Citibank now completely. My exposure to the market has been dwindling. I had some exposure to Micron, and honestly speaking, I was very hesitant to get rid of my last few shares of Micron, but I just did. Micron's been running for a long time, and I had purchased the majority of my Micron as low as 29. The reason I'm bringing this up is a very important thing. I know I'm telling you guys not to freak out, but if you're on margin, get off of margin now. Like, yeah, you might be like, Frugal Tiger, you piece of shit. S&P is going to run to 4,200, and if it does run to 4,200, you're probably going to get pissed off at me. But I think we're going to have some volatility. I'm not saying don't even fully invest or whatever, but trade with money that's yours for the time being. Don't trade with the broker's money. We're going to have some volatility. A lot of things in the market, like bond prices going up, I don't see it happening on a continual basis, but I think there is some potential where bond prices continue to drop, and this will result in higher yields. If we have crude oil prices spike up, there's going to be some more worry about inflation, and I think this is going to result in yields going a bit higher, at least in the interim, causing some volatility. So if you're on margin, get off of margin. I would even trim some exposure to certain growth names that you're a little too exposed to. I had 80% exposure to banks at one point, but I've been trimming for like months now. I am going to discuss what I've been buying instead. I'm not buying SPY, which is normally my biggest long-term trade. I am going to carefully pick stocks that I place money into, and I want to kind of go over what's going on right now. So let's go over some tickers really fast. Tesla, I think, is one of the big stories. Tesla's gotten beat up. It's dropped below $600 a share. And no, Frugal Tiger did not make money on the short side, because Frugal Tiger has been out of the short side. Tried to short this name twice and failed very miserably both times. I'm watching Tesla again, potentially for a buy. We'll see. And keep in mind, when I say buy, I'm taking positions on and off really fast. Sometimes, I mean, you guys see my trading videos, sometimes within minutes. We'll see how the Tesla tape plays out, but Tesla is actually interesting because I think there's a potential a lot of people are going to step in to buy this dip on Tesla. I'm watching NIO for the same reason. I actually picked up 1,000 shares of NIO on Friday, around $34 a share. So I'm already up on that, but we'll see. These are heavy growth names. I know I keep talking about not wanting to hold ADRs like NIO overnight, but the stock is half I picked it up at half the value it was literally 2-3 weeks ago. I feel like the risk to reward ratio is in my favor in a name like NIO. Can it go down further? Of course I can. I feel like the risk to reward ratio is already in my favor, and I'm already up like 5K on NIO. Plug, Fuel Cell are two names that I am actually confused on whether I should buy the dip in size. So I picked up about 600 shares on Plug, not really a large size for me, and I picked up 1,000 shares on Fuel Cell, not really a large size for me, on Friday. So I bought the dip in both names. I don't know. These stocks have run really hot, but they've also come in half the value with not really too much reason to, other than the fact that bond prices are spiking and their valuations are a bit high. Having said that, I think I'm okay with my plug position. I think I might actually be adding to that. We'll see. Like I keep mentioning with these tickers, I prefer to buy these types of names as they're running up and not necessarily buy the dip. I bought the dip because it's down about 50%. And that's why I'm buying the dips in some of these names. This goes to the next point I'm going to make. I have actually, for the first time, found some names that I'm adding to my long-term exposure. This is a lot more volatile than my bank play, but I'm not putting the same volume of cash behind them. Palantir being my largest position right now in terms of my long-term investing. I will continue to day trade the name, but with the shares at $22 a share, I could not help but put a large size of Palantir stock. I think the stock can obviously continue to go down, but I picked up a whole lot of shares around $22 a share. I plan on holding this name for the long run. I might trim and add, but this is a name that will constantly be in my list, even through major corrections. And I did the same thing with banks. I was holding banks for a long time before they had their move, honestly, for like 2-3 months before they had their move. I'm hoping that's not the case with Palantir, but keep in mind, momentum is not with these names anymore, so you have to keep that in mind. I have actually taken a speculative trade of a smaller size than Palantir, but way larger than my normal size on Tilray. And the reason is it's I actually bought it on Friday for $21 a share. I just loaded up on Tilray Friday. And it's the same size of Tilray that I sold for $42 a share. I am okay with this name. It is a speculative play. It is a marijuana name, but I feel very good with Tilray. Yeah, there's a merger between Tilray and Afria, APHA. You guys could look into buying that. It's potentially a better arbitrage play to buy APHA. I have about 1,000 shares in that as well. These are high risk names though. You guys have seen what's happened to Tilray. But I think there's also, despite the stock being able to crash back down to $7 a share, I think there's a potential that it could easily get back to $40 a share and a potential for an asymmetric return on this name over the course of the next 3 years. It is a high risk name, so keep that in mind when you buy it. Lastly, I want to talk about space. I've added space to my long-term portfolio, and you guys, this is the first one. This was one of my worst timings that I have had in a while, especially for longer term investing. I started sizing into space around $36 a share. I bought a little bit more at 33, and then I waited. And then on Friday, there was news that Chamath Palihapitiya actually sold his entire $213 million exposure. I actually love that man. He's a very blunt and very honest guy. I wish there were more people like him on this earth. And he's actually taking the money to go save the earth. But you know what? Everyone thinks about saving the earth nowadays. My next door neighbors are talking about saving the earth. What about saving Frugal Tiger's bankroll? Frugal Tiger is holding a bag of shit on space right now because Chamath Palihapitiya sold his entire exposure to space stock between $35 and $36. When the news broke of that the stock actually literally crashed again. I mean, the stock already crashed from $66 a share down to $36, but it crashed again down to $24. I decided I was gonna take my second high risk speculative trade on space, and I actually added some more size on space around $25 a share. I think momentum is now against it. So it's no longer, you might not see it in my day trading vlogs as much going forward. It might not be a good day trade anymore going forward, but I have decided to add it to a very speculative kind of portfolio where I have Palantir, Space, and Tilray. So I'm going to the moon. high as a kite, and I got a data analytics company to make sure I get there safely. I just want to make sure you guys are aware. I don't know if we're out of the woods yet or not. When I'm saying I'm adding these additional names, I'm adding them in very small size. I added to NVIDIA and AMD, and when I mean small size, I mean small size. Like NVIDIA, I bought under 100 shares of NVIDIA. I think it was like 20 at $495 a share, 20 or 30. And I bought 200 shares of AMD around $78 a share. Like I said, I hate buying when the market drops this much. I want to see the tape kind of start moving back up before I start buying. Nasdaq has actually corrected 10%, you guys. With the Nasdaq correcting 10%, there is a possibility, as long as bond prices don't go out of control next week, that we start seeing some additional buybacks. Also, Friday, the tape did look very strong, but that could also be a very strong up day in the middle of a very large correction. We don't know. If you guys do get a rally like this, maybe, and you're on margin, try to get off a margin on the rallies. That's my biggest piece of feedback. Maybe even free up some cash. It doesn't hurt. We've been rallying nonstop forever. It wouldn't hurt to free up some cash. Okay, I'm rambling too much, but we don't have that many earnings this week that I want to talk about. So I want to talk about a few other names from last week. Square, Snap, and Twitter. These were all names, these three names were actually breaking out last week before bond prices went out of whack. Square actually shot up to 260. Snap and Twitter actually shot up higher. These names actually dropped $10 a share. You could actually maybe look into buying them. Do not buy the dip on these names, guys. If the tape action looks strong, hop on. But I think the valuations are highly valued stocks, so don't necessarily buy the dip if you see it. The same thing with Fastly. I talked about Fastly a few weeks back. It's down even further right now, and it's going down pretty fastly. It's at $64 a share. You could potentially look to buy this if the tape turns around. Do not do what I did with AMD and NVIDIA and buy these names on this dip. Those are companies I really do believe in. I don't know what the fuck Fastly is. For all we know, the CEO could be related to Elizabeth Holmes and Theranos, and it could be a gigantic fucking fraud. So I don't know anything about this company. Just if the tape turns around, it could go up very fastly. And I feel the same way with Zoom. Zoom went down because of the reopening. It's down a lot off its highs. Don't buy the dip thinking it's a great time to buy the dip. Watch the tape. There's a potential this can squeeze though. The one stock I want y'all's opinion on is Workhorse. What do you guys think of Workhorse? It's at $13 a share. It's at $40 a share. They lost a major government contract. I think I talked about that last week with USPS. What are your thoughts on this company? I don't know. I'm talking way too slow. So let's go through the earnings. There aren't that many this week. So on Monday, we have XPEV, which is supposed to be China's competitor to Tesla. Ticker symbol XPEV. I thought NIO was China's competitor to Tesla. I guess they just don't like Elon Musk or something, and they just want to release multiple competitors to Tesla. So XPEV, watch that. You could watch Wish, but honestly, I don't know too much about Wish. Ticker symbol WISH, Wish. Those are the two on Monday that I'm watching, but even Wish, I'm not watching that heavily. Tuesday, we have MongoDB, MDB. Wednesday, we have Cloudera. You don't honestly need to really watch that much. It's a tech play. It's a very smallly valued tech company. You have Oracle. Honestly, not necessarily the greatest earnings trade, but I feel like I needed to mention Oracle. And Bumble. I think you could watch Bumble for an earnings trade, but I'm kind of avoiding the name for the time being. Like I said, slim pickings this week. Thursday, we have JD.com. We have Alta and DocuSign. Thursday's like the only good day for earnings. Friday, we have AT&T, and honestly, I don't care about AT&T that much anymore. It's not. I don't know if it's worth having the dividend for that stock. It hasn't been catching a bid for God knows how long. I'm really on and off about how I feel about AT&T. I don't see it dropping a lot in a correction, but it's just not moving, man. I don't know if it's worth the massive dividend. 7% is a heavy dividend. I don't know if it's worth it. Anyway, that's all I have for this week. Like I said, if you're on margin, lighten that up right away. Consider raising some cash, but don't freak out. The market's already dropped 10%, and oftentimes, if you're trading Nasdaq, market's already dropped 10%, and oftentimes this is a time where technically you'll start to get a bid, and it could drop after a bid, but you might see a little bit more positive price action on Monday. A lot of this depends on oil and bond prices and potential for inflation. Just keep yourself safe. The market's been hot for a long time. Don't overdo it, and stay frugal. I'll see you next time, boys and girls. And, I don't have very many girls that watch my channel. So stay frugal. I'll see you next week. Thanks again.
I just want the money, 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 money.